Welcome back to the channel, everyone. Today we're diving deep into one of the hottest topics in the tech and finance world. Nvidia's stock and the growing chatter that smart money is stepping in. If you've been watching the markets closely, you know Nvidia has been on quite a roller coaster lately, and there's been plenty of debate about who's really driving the recovery. So, is the institutional smart money really backing up Nvidia? Stay tuned as we break it down. In today's video, we'll cover 5 main topics. 1. Retail versus institutional activity. A look at how retail investors have been stepping aside while institutional players move in. 2. The smart money thesis. What does smart money really mean in this context? 3. DeepSeek and its impact. How the launch of DeepSeek is shaking up AI and what that means for Nvidia. 4. Market data and option flows. An analysis of the recent data and the institutional option flows that might signal a comeback. 5. Future outlook. What can we expect from Nvidia going forward, including revenue forecasts and expert opinions? Stick around because we'll also be sharing insights on how to stay engaged with this evolving story. Before we jump into the details, I want to hear from you. Do you think retail investors have missed the memo, or is it smart money that's really driving the rally? Drop your thoughts in the comments below. Your opinions matter, and might even feature in our next video. Let's set the stage. Nvidia, the AI market darling, has experienced a fascinating market dynamic recently. While retail investor interest has waned, evidenced by a mere $34 million net purchase this month according to research from Vanda Research, the stock itself has bounced up around 5% this February. It's up 13% from its lows just a few days ago, even though it remains about 2.5% down year-to-date. In contrast, institutional investors, the so-called smart money, appear to be strategically stepping in. Although the institutional option flows haven't rebounded as strongly as one might expect, some analysts view this as a vote of confidence. Wall Street is now closely watching Nvidia's trajectory, especially as concerns around the launch of DeepSeek, an innovative, cost-efficient AI model from China, add an extra twist to the story. So what's really happening? In the next segments, we'll dissect these dynamics and see if the current recovery is indeed being driven by smart money. Let's start by comparing retail and institutional investor behavior. Recent data shows retail investors have dramatically reduced their Nvidia purchases this month. In fact, retail activity has not only slowed, but there's evidence of position dumping in even leveraged ETFs like the 2x Bull Nvidia ETF. While retail sentiment has turned cautious, institutional investors appear to be taking advantage of what they see as a temporary dip. Many market watchers believe that when retail sells off, it creates an opportunity for those with more insight and deeper pockets to step in. This is where the term smart money comes in. Despite the somewhat muted option flow data from institutions, there's a growing consensus that parts of the institutional world are positioning themselves favorably in Nvidia. Analysts have hinted that this could be a strategic move to build positions ahead of what they predict will be a significant recovery. So what exactly is smart money? Essentially, it refers to investments made by those who are perceived to have deeper insights into market trends. Think institutional investors, hedge funds, and other professionals. Their moves are closely watched because, in theory, they have the expertise and resources to conduct in-depth analysis. Even though the current data on institutional options isn't a slam-dunk confirmation, the overall picture is one of cautious optimism. When the retail crowd pulls back, it often sets the stage for a more informed, strategic entry by smart money, signaling that a turnaround might be near. Now let's talk about DeepSeek, a game-changing development in the AI space. China-based DeepSeek has generated buzz by launching an AI model, Rhode Island, that performs similarly to ChatGPT at a fraction of the cost. Reports suggest that building their base model cost around $5.6 million, compared to the hundreds of millions typically spent by US companies like OpenAI and Anthropic. This breakthrough has led some to fear that the massive spending on AI infrastructure might be coming under scrutiny. However, key voices in the industry, including analysts and executives, argue that the DeepSeek launch doesn't threaten the long-term growth of AI, or Nvidia's critical role in powering these technologies. Evercore's analyst Mark Lipacis notes 3 potential reasons behind the current weakness: reduced overall AI demand, a shift in compute cycles from Nvidia GPUs to custom ASICs, and delays in the rollout of Nvidia's next-generation Blackwell chips. Despite these challenges, many believe that DeepSeek is merely a sign of a maturing market, rather than a disruptive threat. Let's take a closer look at the numbers. According to Vanda Research, Nvidia's retail purchases have sharply declined this month, down to a net $34 million on Monday alone. Yet, on the flip side, Nvidia shares have rebounded significantly since their February lows. With the S&P 500 showing a slight decline, Nvidia's relative strength is all the more intriguing. Although institutional option flows haven't yet rallied in a way that conclusively confirms a massive institutional entry, the overall trend is one of cautious accumulation. Many investors view the current dip as an opportunity, a kind of buy the rumor, sell the news scenario where institutional players quietly build positions in anticipation of a stronger recovery. As we look to the future, the big question remains, what's next for Nvidia? Analysts are forecasting nearly $42 billion in revenue, and if management's guidance surpasses that figure, it would be a strong signal that current concerns, like those posed by DeepSeek, are overblown. Even if short-term challenges persist, Nvidia's leadership in the data center and AI chip market remains unchallenged by many experts. With institutional investors potentially ramping up their positions, the stage could be set for a significant upward surge post-February 26th. For investors, the key will be to monitor not only the price action, but also the underlying shifts in market sentiment and technological advancements in AI. To sum up, while retail investors have hit the brakes, the smart money appears to be positioning itself for what could be a robust recovery. Whether you're a seasoned investor or just curious about the tech trends, it's clear that Nvidia is a stock worth watching closely in the coming weeks. Thank you for joining me on this deep dive into Nvidia's current market dynamics. Today we uncovered how the retreat of retail investors might be paving the way for institutional players to step in, and what the launch of DeepSeek means for the future of AI and Nvidia's market position. Before you go, here are a few quick questions to ponder. Do you agree that institutional investors are the smart money behind Nvidia's recovery? What impact do you think DeepSeek will have on the broader AI ecosystem? I'd love to hear your thoughts in the comments below. If you found this video insightful, please give it a thumbs up and don't forget to subscribe for more in-depth market analyses. Hit the bell icon so you never miss an update. And if there's another topic you'd like us to cover, let us know. Your feedback drives our content. Stay informed, stay curious, and until next time, keep watching the markets.